Hey, what's going on, everybody? It's Thursday, July 27th. Got the old Bruce Lee. Hey! So today was interesting because we had a bunch of positive earnings and the market jumped up on the opening and then just kind of slowly gave back those gains and then went negative about halfway through the day and then just stayed negative to the end. So, I've been saying now for weeks and weeks that we'll be coming into the period. Usually it's like the first week of the month when we're having a quarterly interest payment. We're going to get that quarterly interest payment on August 15th. So we're coming into that. I mean, I've been noticing that the fiscal flows usually peak out a little bit before that. We get a bump back up again because of first of the month payments, which will come out on Tuesday. That's big. That's like 100 billion, payments day. And then we get like a 51 billion addition in an interest payment on August 15th. But it's not going to be enough to boost the flows up to a new high in this quarterly cycle. So we may be peaking out right here. And, a lot of things from kind of a contrarian perspective, like if you're looking at sentiment now, although it was interesting, I have to say that in the latest AAII weekly sentiment survey, that's the American Association of Individual Investors, they put that out every week. It actually showed a drop in bullish sentiment in the latest week that ended, yesterday, July 26th. So we had like a 6.5 percentage point drop. It was like 44 or something, I think. So not even 50. The previous week we had like a 51 and we hadn't seen that, in like over 2 years. But it just goes to show you, I mean, this is something I've been saying, for a long time when the market was deeply, deeply oversold and sentiment was so bearish and negative and everybody was worried about the Fed and this and that. I said, look, this is the time to be buying. This is the time to be buying because number one, you got to be a contrarian. And number two, the whole fear based on rate hikes was unfounded because what we're seeing now, and even some of these diehard monetarists are saying this, that, hey, these interest flows are getting really, really big. Now, of course, they talk about it from the perspective of, the government, is going to be in so much trouble making these payments. Well, that's ridiculous. They're not going to be. They make payments the same way they make every payment. It was just like a keystroke on a computer. So that's not a problem. But they always have to frame it like that because in their minds, it's all about monetarism and they don't understand. Like you can't run out of, the government can't run out of dollars. Yeah, sometimes we do stupid things like we impose constraints on how much the government could spend in its own money with stupid things like the debt ceiling. But those are artificial political constraints, and they have nothing to do with the money issuing capacity of the U.S. government. Okay, the dollar issuing capacity. But anyway, so this wobble we had today, and I'm not sure if it's the beginning of something, but I still do think that by next week we should see a deeper correction. And then we get into September, which is going to have that September 15th quarterly tax train. That's a corporate tax. And then we get into October, where October 15th is another tax train, an individual tax train. And we really don't get back into a positive environment until like mid to late November. A lot of times I use the analogy or the metaphor of the mariner out on the open seas, and there's the sky ahead is looking like it might develop into some storms. So batten down the hatches, like it's just to be wary of that, to know what's going to happen. It's not an end of the bull market by any means. I mean, the bull market is really just getting started because if you look at these interest income transfers, I mean, we're just in the very early stages of this. As long as the Fed keeps rates high, they don't even have to raise it anymore. But as long as they keep rates high, that's just going to translate into bigger and bigger interest income transfers every week and every month. You still have tons and tons of securities that are going to mature, and they're going to roll over at the higher coupon, and the transfers are just going to accelerate like a parabolic move. There's a lot to go here, and the only way that's going to slow down is if the Fed actually starts cutting rates, and that's nowhere in the picture. I mean, they just raised rates yesterday by 25 basis points again. So and that's just like throwing gasoline on the fire. It's one thing to keep rates high at this level for a long time. That's all you need for this massive income transfer. But they keep raising it. So, I mean, it's just going to accelerate the whole thing. So, and this is why, I see so many of these headlines now. Oh, the economy is surprising everybody. Not surprising me. It shouldn't be surprising you if you've been listening to these videos or if you're a subscriber to my report. I've been saying that the economy would have very decent growth, and that's coming even with large tax drains. Growth is hanging in there at levels, that we've become accustomed to, but record amounts of taxes being collected. I said yesterday in my video, and I said it before yesterday too, several times, that even a small tax cut at this point, if that were ever to get passed, which I doubt it will, but even a small tax cut at this point would, superpower or supercharge the economic recovery. But alas, I don't think that's going to happen. But like when I look at the how much is being paid in individual taxes right now, it's a record. It's enormous. It's about 260 billion over this time last year. That's a big increase in a year. That's a big increase. You usually don't see stuff like that. So, and the economy is still growing because the transfers, the fiscal flows are outpacing the tax growth. And that's just going to continue to be the case with with the interest income. So it's not the end of the bull market. You're going to get a pullback. Hopefully it'll be a big, scary one. I love that. I raised some cash recently on stocks that reached my levels of valuation targets, let's put it that way. By the way, I do have a course, a video course. Nobody really buys it, but it's also included in the 3-course bundle that I sell, which is the Forex course, Understanding the Daily Treasury Statement, and the 3rd course that I'm about to mention is called MMT and Value Stock Selection. It's my criteria. It's a very simple process of how to pick stocks and combine that with knowledge of MMT. You could buy that course separately for $99, or you could buy all 3 for $295. That's the Forex course, the Understanding the Daily Treasury Statement, and MMT and Value Stock Selection. So you can go to my website at pitbulleconomics.com and get that at any time. Anyway, that's it for today, folks. Beautiful day here, as always. I got still getting used to this Southern California, man. It's just like every day is perfect. And I think I'm gonna go out and take a little walk, and then I got some work to do, and hit the sack after that because I wake up very early. All right, everybody. See you tomorrow. Bye.